Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
All right. Hey. Welcome back to the Invested Dads Podcast, a podcast where we take you on a journey to better your financial future. I am Austin Wilson, research analyst at Hixon Zuercher Capital Management.
And I'm Josh Robb, director of wealth management at Hixon Zuercher Capital Management. Austin, how can people help us with our podcast?
We would love it if you would subscribe if you're not subscribed. So hit that follow plus, whatever that subscribe button on your device or player is, hit that. We'd also love it if you'd visit our website and sign up for our weekly newsletter to get notified each and every Thursday when a new episode drops. You get a nice little email, has a nice little summary about what we talk about. It's pretty well done. So please do that. But today, Josh, we're going to be continuing our series looking at America's companies, some of the largest companies here in the United States. So we're going to give a little background. We're going to talk about the company, what it does, how it makes money, and a bit about their financials and some certain areas of their business.
And always, we're talking about publicly traded companies.
We are.
That does not mean that it is a recommendation or that we are suggesting that you own this or buy this in your portfolio.
So please talk to your advisor before you take any position, long or short. Great reminder, Josh. Thank you for that, Chief Compliance Officer. That's off to you. Today, we're talking about Meta Platforms, formerly known as Facebook, and we're going to get to that. Something that pretty much everyone in the world, in some way, shape, or form, uses to some extent. There's like 3 billion monthly active users out of 7 billion. It might have just crossed 8 billion on the planet, but still, that's a huge proportion of the world using some of their products. So let's give a little bit of overview of the company. So Meta, the company we're talking about here, formerly known as Facebook, they build useful and engaging products that enable people to connect and share with friends and family through mobile devices, personal computers, and virtual reality headsets and in-home devices, which was called their portal or whatever Facebook.
FaceTime.
Remember that?
It moves.
Kind of a cool thing.
Weird.
So Meta, which allows outside developers to build apps to integrate with Facebook, boasts 3 million monthly active users.
Billion with a B?
That's a billion with a B.
Wow.
In addition to its namesake platform, Facebook owns photo and video sharing site Instagram, Facebook Messenger, and WhatsApp.
WhatsApp
What's up with you, Josh? And virtual reality platform Facebook Reality Labs. The company generates about 55% of sales outside the U.S.
Okay.
You can look at how they operate in two different segments. First of all, you have the family of apps. That's how they report it. So family of apps accounts for, get this, 98% of the company's revenue.
And the family of apps are?
Things like Facebook, Instagram, Messenger, and WhatsApp.
So the things you download onto a device, your tablet, your PC, your iPhone, whatever you're doing it on.
So the company generates substantially all its revenue from selling advertising on these platforms, to marketers.
Okay.
So ads on its platform enable marketers to reach people based on a variety of factors, including age, gender, location, interests, and behaviors. Marketers purchase ads that can appear in multiple places, including Facebook, Instagram, Messenger, and third-party applications and websites.
So third-party would be like, I create a game, but it uses the Facebook infrastructure platform to run it.
You can build an app through Facebook.
Gotcha.
So that's 98% of the revenue, right? So essentially the whole business. Then you have the Reality Labs.
Reality
Labs accounts for the remainder of revenue. So this is augmented and virtual reality products. Meta Quest is their main product that lets people defy distance with cutting-edge VR software. And then you have Facebook Portal video calling devices. Reality Labs generates revenue from sales of customer hardware products like their Oculus Quest or the Portal we just talked about, software even also, and content.
So Facebook owns Oculus.
Yes.
That's the
VR
hardware
device that you wear.
Okay. Gotcha.
Yes. So let's take a step back. Geographically speaking, the company's pretty global. However, it's based in Menlo Park, California. And again, 55% of the revenue comes from outside the U.S. The company has offices in approximately 80 cities and has more than 15 data center facilities all around the world.
Okay.
So pretty global in terms of the company. So let's talk about sales, talk about marketing. So they use a global sales force to attract and to retain advertisers. It also serves advertising customers through a self-service ad platform. It works directly with these advertisers as well as through advertising agencies and resellers. Meta also invests in and relies on self-service tools to provide direct customer support to its users and partners. And I've used some of that customer support when Facebook payment or whatever didn't go through or whatever it would be, and it worked out great. Either the AI was really good or it gave me a real person really quick. So that was pretty good.
I think that's the key to success. Move outside of Meta real quick.
Yeah.
If you're going to use AI or like a robot to answer questions, you need a very quick way of figuring out if they're actually going to get the job done, or you need to get to a human person. Because
it should take
there's nothing more frustrating than it keeps trying to figure it out. And you're just let me talk to somebody.
Yep. So Meta spent $2.99 billion, $2.26 billion, and $1.57 billion on advertising in 21, 20, and 19, respectively. Okay. So that's grown almost double.
$3 billion it spent last year.
Yeah, exactly. Okay. As part of its strategy, the company has made and intends to continue to make acquisitions to add specialized employees in complementary companies, products, or technologies. This was made evident when they actually bought Instagram for like $1 billion.
Yep. And WhatsApp.
WhatsApp with what?
That they bought that for a lot.
Exactly. But the Instagram acquisition, $1 billion, was thought to be crazy and way expensive, and no one's going to make any money on this because Instagram wasn't monetized at the time. And look what Facebook's done with it. It is a ad-generating machine, and really, millennials and Gen Zers, they're not even using Facebook.
Yeah.
They use Instagram.
Right.
Instagram is where they go, and that's where their ad
not only
dollars
that,
are
but
valuable.
I'm of the mindset, I'm hesitant to click on sponsored or links of advertising in these things, just from just how I am. Like if I see something on, let's say, Instagram, I'm like, oh, that's interesting. I'm hesitant to click that link.
Yeah.
I just want to go to the website so I know it's not something weird.
Right.
But I know a ton of, especially young people, like that's where they get their recommendation and ideas is straight from those
they'll buy
advertising.
right through it.
Yeah, it's crazy.
It is crazy. You're going to think I'm crazy.
No, I don't. No.
I'm a middle-aged millennial.
You are.
So I'm not a Gen Zer or a younger millennial. I'm in the demographic, I think, that is less likely to use much of anything because I feel like people older than me are more Facebook users, and Facebook's okay. I have it. I really use it to sell things. But people younger than me use Instagram. I don't use Instagram at all. I don't even have an Instagram. So I'm in that weird in-between thing. And you're all over them all.
Not really.
You got a Twitter.
I got
3 followers. I'm one of them.
Yep. I'm all in on not being active. So.
Yeah, exactly. The invested dads are pretty active.
Yeah, we are.
That's what I'm saying. So anyway, that's part of the strategy there. Meta also anticipates that additional investments in its data center capacity, because lots of data going on with all of these users around the world, their servers, their network infrastructure, and office facilities, as well as scaling its headcount, so hiring people to support growth. The company expects capital expenditures this year to be in the range of $29 to $34 billion, very much higher than it has been in the past, by the way, we're going to get to. Total expenses to be $90 to $95 billion, again, higher than it has been. So companies spending a lot of money right now. And a lot of that is going to the Reality Labs kind of virtual reality. They pushed
hard into that side of things.
Yes. The Wall Street doesn't necessarily like it, and we're going to talk about that a little bit. But they're just saying, we're going to do it anyway in a big way. So a little bit of background about Meta, or Facebook as it was formerly known. Facebook, the company, the product specifically, was launched in 2004 by Mark Zuckerberg when he was a student at Harvard. It was an online version of the Harvard Facebook, is what it was originally known as. That's 2004. I got Facebook, my first one, I think I got it in 2006. So I've been on it almost from the beginning. It's definitely changed a lot.
Originally, if I remember this right, and you can correct me, maybe you remember too, didn't you have to have a school email address to sign up for it originally?
You did, probably in like 04.
Yeah.
I did not in 06. Did you? When did you get on the Facebook?
Early on, I did, and I feel like that was one of the things that they like checked.
That was about the time you were in college?
I was in college in 2004, and I'm just trying to remember.
You and Zuck, you're like the same age.
Yeah, not the same school, but yeah, I feel like that was one of those weird things about it early on, and then they expanded out of there.
So, flash forward about 8 years. In 2012, so now when I was in college, Facebook began publicly trading after filing one of the largest IPOs in U.S. history. So
the largest
font? Big IPO in like 89 font. IPO stands for initial public offering. That's where the company goes public for the first time on the market. That was in 2012. And I remember sitting in finance classes in 2012, 13, when Facebook was just public. And we were all like, oh, this company's never going to make any money. why would you buy Facebook stock? This is ridiculous.
And it went down pretty hard early on.
Oh, yeah. And, then they had this amazing run.
Because they showed they could earn ad revenue.
Oh, yeah. So that was 2012. In late 2021, the company changed its name from Facebook to Meta Platforms in an effort to align the name of the company with where they saw the greatest growth. So really, the company, the way I see what happened in late 21, carrying through 2022, Mark Zuckerberg's like, okay, listen, I got all of these apps. They make great money. Like, there is no better way for advertisers to reach people than through Facebook ads. It's the best advertising in the world, but the growth is definitely slowing. We can't grow at this speed forever. We know that that's not where the future is in terms of growth, but it's a great business to generate cash and have stable revenue. Well, then he's like, I need to think of something new and exciting that has a lot of growth ahead of it to really supplement a slowing business, because advertising in itself, it's a pretty slow growing business. Online advertising just grew so fast until it got as penetrated as it is now.
Yep.
So this was their effort to say, new and exciting way
more than just
to grow again. And in doing so, has really cut the stock in half.
Yes.
That's where that is. So that is a little bit about the background about Facebook. So, Josh, have at it.
All right. I have a Facebook joke for you.
Facebook joke of the week?
Yes. Dad joke of the week about virtual reality.
Okay.
One of the most popular things to do with virtual reality
is
reading books. Yeah, it's a novel experience.
It's a novel experience. I love it, Josh. I love it. That's a good one. Let's get back to Facebook.
Meta.
All the above. I still sometimes call it Facebook. We're going to talk about some competitive advantages for Meta as they stand.
Yep.
So one of them is network effects, because they have a huge user base. 3 billion people. We're going to get to some actual numbers on that, but tons of people, and the intangible assets around really data about those people, which is that just a huge collection from users having shared different data points.
Oh, yeah. They know
sites,
so much about
apps.
everybody.
They know everything. People don't like to think about this, but they know what you click on and how much time you spend on even an image or whatever, or on their site, obviously. But also between different things like a browser and Facebook, a lot of times they have those links between the two of those. So there are certain ways that they can see what you're doing on browsing and then target ads based on what you're browsing back to Facebook. It's amazing.
Because it's a lot of Royals says, would you like to use your Facebook login?
Oh, yeah.
For this? Well, you got to know they're sharing that data then.
Yeah. If you do that, you have to know you have no privacy. So Facebook is also slowly becoming an entertainment hub, which is helping to increase engagement and user time spent on Facebook. So one of the things is Reels, right? Facebook Reels or Stories, same sort of thing. They're trying to capture a lot of the audience from TikTok.
Yeah.
TikTok's huge. It's been
Those
growing
are similar
crazy.
What they do.
Yeah, a lot of very similar little short videos and stuff like that. And the algorithm on TikTok's very famous for being very good about, if you watch a lot of meat smoking videos.
I watch a dad joke, I get another dad joke.
That's right. Or meat smoking videos. I was on the food TikTok, and it just it's a deep hole. There's a lot of food on TikTok.
A lot of cooking.
So anyway, they're trying to do that with Reels specifically.
Okay.
So additional apps created by developers on the Meta platform also help maintain users within the ecosystem. So that's same apps, similar feel, all tied together, using same login. A lot of times, some of those are even made by Facebook themselves. Here's an interesting statistic. According to eMarketer, on average, users are on Facebook and Instagram a combined 65 minutes per day, posting videos and photos, exchanging messages, making comments, content, and all that stuff.
I feel like that's actually low.
65 minutes a day.
That's an hour, just over an hour.
That sounds crazy.
I know. I feel like that's low, though. I mean,
do you know
you
what
watch kids?
Do you know what, like, an old school advertiser would have killed for 65 minutes of engaged content?
They would take 10 minutes.
They would take 6.
Yeah.
Like a tenth of that. And this is gold. That's why the company was so favorably viewed by Wall Street specifically, because of the engagement. It's addictive, right? Social media, it's addictive. So outside of network effects, which you just talked about, they have developed intangible assets. So unlike any other online platform in the world, Facebook has accumulated data from about everyone with a Facebook or Instagram login. Facebook has their demographic information. It knows what they like and dislike. It knows what topics or events they're interested in. And again, like I said, they can kind of see what you're doing on other areas of the web and target things towards you. They also have access, because of an agreement that you made, to most of your, if not all of your, photos and videos on your phone because you can't upload them unless you give them access, and you can limit the access, but most people don't because it's so much easier not to. That's crazy. So I'm sure they've got AI going through all that stuff. You shouldn't have anything to hide to begin with, but you definitely need to know that there is no secrets.
Yep.
And these are the only way they have this valuable data. They can monetize it and target you. And that's why advertising online works the way it does.
You always feel like, even when I'm verbally talking about things, then I see those advertisements for them show up.
I don't think that's true, but
I don't think it's true.
Is.
And it's probably just because I probably Google searched the same thing I was talking about, and then it shows up everywhere else. But I just feel like sometimes you're like, I only was talking to somebody about that, and look what's showing up.
My understanding,
and
I've been pushed back on this.
Yes.
Your phone does not record what you're saying, and then Facebook or whatever or Instagram have access to that so that it can target ads. Their algorithms are purely that good based on other things you've liked, seen, scrolled to, surfed, so that it can target that without doing that.
Okay.
That's my understanding. I've been pushed back because people say it's too eerie how good it is.
I don't know.
I don't think they can do that. Apple and Facebook are not friends.
They're not.
No, Apple has notably made it very tricky for Facebook to do what they needed to do in terms of advertising tracking. That would be a big disconnect because it would have to use the Apple hardware or the Android hardware. Android's a whole different Wild West ballgame. But Apple hardware.
Well, there are verified and unverified
apps.
And you got to be very careful.
Right. Yes. But specifically, whatever your phone manufacturer is, your phone manufacturer does not want to be the company known as giving your recording to Facebook.
Gotcha.
So that's my understanding.
Sounds good.
All right. Got to do it. I'm a numbers guy. Fundamentals.
All right.
Revenue has grown at a 41% compound annual growth rate. Yes, that's a big number over the past decade to 118.
Well, they were probably at negative
billion.
For a while, so yeah, you can grow.
You can't have negative revenue.
They always do. They're like losing money.
That's profit.
Yeah, they're
not revenue.
Everything's going the other way. They're giving money away, buying users.
41% revenue CAGR over the past decade, 118 billion in 2021. Operating income, 31% CAGR over the past decade to 47 billion in 2021. Earnings have grown at a 44% compound annual growth rate over the past 9 years because 10 years ago they actually had a loss. Yep, to $13.77 per share split adjusted. In 2021, the company does not and has no plans for a dividend anytime in the future. They're taking any profits and throwing them in the metaverse right now.
Yeah, throwing them into the trash is what they're doing.
So there's no plan on a dividend at all. Even though they had like the cash flow to have a great dividend forever, they didn't want to.
Yeah.
Cash. Speaking of cash, it's increased at a 27% compound annual growth rate over the past 10 years to 16.6 billion. And that's been coming down sharply this year, the past 3 quarters.
That always reminds me of, you see those things online, they're like, 16.6 billion in cash. They could give every person on the planet $2 billion and still have some left over. The math doesn't work out that way, but sure.
Yeah, exactly. Long-term debt, $13 billion at the end of 21. Capital expenditures, investments, thinking the long-term investments, increased at 41% compound annual growth rate over the past decade to $18.5 billion at the end of 2021. And that's only increased further the last 3 quarters, really amping up the spend on the metaverse. Again, free cash flow, 45% compound annual growth rate over the past 10 years to $39 billion at the end of 2021. Diluted shares outstanding increased at a 7% CAGR over the past 10 years, but I really have been consistent for the past 5 years or so. The company has not been aggressive like Apple. We had already looked at Apple. Apple was notably very aggressive buying back stock over the past 10 years or so. Facebook's not been that way. In fact, early on in the decade, they were increasing a lot of shares really for stock options and stuff as the company was growing, but the shares have leveled off really over the last 5 years or so. When you look at credit ratings, the company obviously can issue debt and stuff like that as well. They have a AA- credit rating from Standard & Poor's with a stable outlook. They're ranked A1 with a stable outlook from Moody's. Neither underwriter, I guess, is saying there's a bunch of risk out there for any debt they would issue because they have good earnings. Now, who knows if that'll get re-rated at the end of this year. Now, monthly active users, 2.96 billion. Daily active users, 1.98 billion.
You got a billion of those that just check in once in a while.
Yep. The CEO is Mark Zuckerberg. He's 37 years old.
Youngin.
He's a youngin. He's the founder and has served as CEO and a board of the directors since 2004, before it even went public. Mark Zuckerberg has served as chairman of the board since 2012, when the company went public. He attended Harvard, where he studied computer science. Makes sense, right? You build an app. The company believes that Zuckerberg should serve as a member of the board of directors due to his perspective and experience he brings as the founder, chairman, and CEO. He's also the largest and controlling stockholder. He has ownership level and voting share rights, which I'm not going to get into the details, but he actually has a ton of voting power in terms of the share that he owns. And because Josh was asking for it.
Yes, I'm ready.
We're going to talk about the metaverse. That's the Reality Labs part of the business. It's only 2% of revenue. It's very small. So in its quest to make the metaverse the next big thing, Meta unveiled recently a new all-in-one VR headset later in 2022, which is building on the Oculus technology for a very sophisticated VR experience. It has some really cool features like eye tracking, natural facial expressions. It's a really high-end device. It's like $1,500. Whoa. Now,
a lot.
You still have to be willing to wear a goofy-looking thing on your face.
I just don't know if this technology has the legs to continue. Well, that's my joke, because the avatars right now
don't have any legs.
Are missing the bottom half of their body.
That's a good joke, Josh.
I was waiting the whole time for that one.
Here is a quote.
All right.
We believe VR devices will help usher in the next computing platform, becoming as ubiquitous as laptops and tablets are today, and that people will use them in their everyday lives to access the metaverse. The company wrote in its announcement of the $14.99 Meta Quest Pro headset. And while Meta has already invested billions in Mark Zuckerberg's vision of the metaverse, so far it remains just that. Really a vision that has yet to come to life. So according to estimates from Statista's advertising and media outlook, users of AR and VR, so AR being augmented reality, so kind of like you can see like normal, but you're wearing glasses or something that can augment like overlays to what you're actually doing. That's AR, and then VR's totally immersive. Users of both of those are still few and far between, with projections until 2027 nowhere near the scale that would make mixed reality the next computing platform as of now. Now, Statista estimates that 74 million, with an M, will be using VR hardware this year, with AR just short of 10 million. By 2027, both AR and VR are expected to surpass 100 million users worldwide, but that's still way short of the billions of smartphone users.
Yep.
And
now, I'll tell you this
Yeah.
before you move on
Go
from that. Between those two, I actually think the augmented reality makes a lot more sense.
Agreed.
Because you still have your natural physical surroundings that you can see. Then you can add to it enhancements. So, for instance, you and I are sitting here recording a podcast. We have our iPads with our show notes on here. What if we had just glasses where we could see the show notes right there while we're talking?
Imagine the teleprompt options.
Yes. And then, if you're having a group meeting, a couple are virtual, a couple are in person, you could see them all together without having to all be in this virtual.
Right.
You can see the physical people there through your glasses or whatever. I just think there's a lot more experience. You could walk around and not run into things. If you ever seen those videos online of people crashing into stuff with their headsets on. But if I was to spend money, a couple $1 billion in capital expenditures, AR would be where I'd go.
And that was something that the video, when they announced all this, was kind of cool, is there was a guy sitting at his desk wearing glasses, not like the goggles, but just glasses. And they're working on thinner glasses.
Yep.
And he would like have a whole wall of artificial screens for his computer above his desk.
That's what I'm saying. You don't
but
need
he
monitors.
reached down and you can get your cup of coffee and not
drink it.
spill it all over the place.
Yeah.
I think that's kind of cool. In the first 9 months of 2022,
Yes.
the company's metaverse lost $9.4 billion.
They better look hard for that.
Which they already lost $10 billion in 2021. This had a drag on overall company fundamentals. The company's operating margin was cut in half over the past 2 years because of all this spending, which is really weighing on short-term results. Ironically, Wall Street are like, guys, cut down on this.
Yeah, spending a lot.
You have a great business that makes a lot of money advertising. Let's not blow it all. And Zuckerberg essentially was like, I know you're saying that. I really do. Thank you.
I hear it.
And he said, no, thank you. Nope. He said, I'm going to do it my way. Zuckerberg is still digging in his heels, and investors are really, really skeptical on it.
Wow. Okay.
Pretty fascinating. So the question that you might ask me with your compliance officer hat on is what?
Should people own this is your question.
That's
you
my
always
question.
ask. But my thing is, one, you got to think about your situation.
Yep.
Right? Always, always, always Does this fit in what my goals and objectives are? Do I have the risk tolerance for it? And we've talked about this, and this is going to be true for a lot of the large companies.
Yep.
If we highlight and continue to highlight these type of companies, chances are they're already in your portfolio if you have exposure to the U.S. stock market.
Yes.
Because again, when it's a large company from a market cap size, most funds, whether they're passive index funds or actively traded, you'll see some exposure to this type of company.
Yep.
And this is not a recommendation, but for most people who have a diversified portfolio, it's probably somewhere in there already hanging out.
Absolutely. Before you take a long or short position on Meta platforms, because that is possible, talk to your advisor about your financial situation. And this is always an opportunity that if you have questions, feel free to shoot us an email. And if you actually are looking for some help in determining what's great investments for you, go ahead and check out the Invest With Us tab on our website. We'd be happy to talk to you about any specific questions about your situation that you may have. But in a nutshell, Josh, that's Meta Platforms,
Yes.
Facebook.
Good to know.
It's an interesting company. I think from a fundamental perspective prior to now, through the end of 2021, I think the company had a really lot going for it, and pushback from Wall Street on Zuckerberg's vision is duly noted in the stock price as the company's down sharply. That being said, from a valuation perspective, again, not a recommendation, but the company has been sold off immensely so that it really trades at levels in terms of profit for what you get for what you price, much cheaper than it's really been in a long time.
Okay.
Very interesting. So something to think about. But thank you for being here. Thank you for listening. If you had someone asking about Facebook or Meta in general, share this episode with them. And again, we'd love it if you would subscribe and leave us a review on Apple Podcasts or Spotify. Until next week.
Talk to you later.
Bye.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zerker Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.